Hello everyone, welcome to Elliott Wave Forecast.com YouTube channel. My name is Henry, and today is Wednesday, July the 10th, and today I will be looking at this chart that is the EURCAD. It's a crosses euro dollars against the Canadian dollars. Now this is the headlines from Bloomberg here, basically saying that the ECB is seen to be readying to reactivate the bonds buying again, the QE, right? And they've been sort of giving a hint on that, starting with this is Bloomberg, by the way, starting by the ECB President Mario Draghi last month said that they will need to add monetary stimulus since the Eurozone economy is basically in a slump for more than a year right now, and also the inflation is consistently below their target of the 2%. Okay, and also another official ECB official here, this person Benoit, I don't know how to announce it. I don't know how to pronounce it. Benoit Korer. Um, he also said that that they can hypothetically restart the QE if the circumstances make it necessary. All right. So there is enough hints by the ECB officials that they will cut the rate as well as doing quantitative easing, and of course President Trump has been also mentioning that in his tweet as well, when he is trying to give pressure to Mr. Powell to also do the same thing and to match the ECB. Okay, so basically now the market has already priced in some sort of rate cut by the ECB, and I think based on what the officials have been suggesting from ECB, and as also the recent nomination of the Christine Lagarde, the IMF head, as the successor of Mario Draghi when his term ends, also suggests, because Miss Lagarde has been known as supporting the QE. She's been quoted as saying that she believes that that is an effective tool. So her appointment basically is seen as giving it as providing a smooth transition to whatever ECB is doing right now, the ultra loose monetary policy that the ECB is currently doing. Okay, so having said all this, so you would expect, okay, if the ECB is really going to do this, perhaps the market should already position themselves for a weak euro dollars, right? Because QE is generally speaking is bad for the currency. So now we'll take a look at the EURCAD, which is the technical view in the using Elliott Wave, and you can see right here, the market does seem to position for a weak euro dollars, right? Recently in the EURCAD, not too long ago, only a few days ago, this week, it broke below this October 3rd low 2018, right? So now we see a low sequence here. This is a daily chart of the EURCAD, and that is telling us that most likely this is going to continue lower, right? And you can see the drop has been pretty sort of like almost an impulse like structure without too much of a bounce here, and so we believe that this one can be some sort of ABC at least, right? ABC. So we're going to continue lower without too much of a bounce, which is possible. So this is within the C, which should be in a 5 waves, and any bounce therefore is going to be temporary. Okay, and then it's going to continue to find sellers in the sequence of 3, 7, 11 swing. So this one has a 100% target here from March 19, okay, towards 143.50. So that remains to be the minimum target. We believe that is the minimum target for this pair EURCAD. And in fact, as an alternate, if we want to, right, we can in fact call it like a 5 waves here. So we can actually call it as a diagonal 5 waves, 1, 2, 3, 4, 5 here. Okay, so this is the more sort of bearish interpretation. You got a 1, 2, 3, 4, 5 like this. All right, and so in this kind of scenario here, you have an overlap, but that's okay as a diagonal. Okay, and this should end you with A. Now you might say, well, width 3 is shorter than width 1. Well, the principle says as long as width 3 is not the shortest one, that is okay. You can see right here, width 3 is longer than width 5. So this is okay as a diagonal. Okay, 1, 2, 3, 4, 5. And then you have an ABC zigzag ending the P here. Now in this case, we could potentially do a width 3 right now. Okay, I mean this in the more bearish scenario, okay, this could be even a 1 and 2. Now we will not see the larger time frame, but just saying that it could be also if it is really bearish, then this can even become a 1, 2, 3. That means that this move lower here, it could extend even to the 1.618, because if this is going to be a width 3, potentially it can even go to the 1.618 extension, and so we are still within the width 3 right now, and we can, you know, extend lower like this 3, and then continue to extend lower. For example, 3 ends here, and then we have a 4 like this. All right, and then another leg lower 5 to finish some sort of a 1, 2, 3, which is sort of the alternate. So bottom line is, regardless whether you want to call, you know, to count it A, B, C, 1, 2, 3, or W, X, Y, doesn't really matter that much. It has the minimum target towards 143.50 here, okay, which is going to be the 100% extension, assuming, you know, a conservative sort of a W, X, Y structure, a double correction. All right, assuming this is the more conservative structure, still is going to most likely extend lower until it reaches at least 143.50. All right, and then from there, if it is a corrective structure, then we can find buyers. If not, then we can continue to extend lower. Okay, so if you I mean, in terms of how to trade it, you can always join us in the live trading room. We will look at the shorter cycle in the live trading room for our members, and then try to identify areas where we can trade, and how to position for the trade, and where to put stop loss and things like that. We have a 14 days free trial. You can look at the link and that will be provided in the description of the video. Okay, so thanks very much everyone, and see you all again next time. Have a nice day.